Hello, my good traders. Our Sunday's market review is here again. And here we give you what we call trading opportunities, forecasts, or signals that we can trade in the course of the week. And we bring that to you every Sunday. Every Sunday. So if you are looking for trade opportunities, if you are looking for signals, if you are looking for forecasts, if you are looking for analysis, that will help you to take some decisions in the forex market in the coming week, then Leading Forex YouTube channel is the right place to be. So today, we will bring you what our forecast or projections will be. What is going to be our trades that we'll be looking at. We'll bring you that shortly. But before we do that, we'll also go and look at what last week trades actually did. Whether they gave us the profit we were looking for or not. We will look at that immediately. Is that okay? Now, before we even finish that, let me also say that there is a bit of time change now in the forex market. Most of the brokers have sent emails to their clients telling them about daylight saving mode or daylight saving time. That has caused the time for the market to open to shift 1 hour ahead. So the time for the market to open for the week has been shifted 1 hour ahead. So in the past, if the market used to open at 9 p.m. in Ghana here, it is now going to open at 10 p.m. in Ghana. If the market used to open at maybe 10 p.m. your time in your country, it is now going to open at 11 p.m. your country time. That is 1 hour ahead now, or there is a 1 hour adjustment due to daylight saving time. If you want to know more about daylight saving, just Google. And I think most of us are aware of this time. If you have been trading the forex market for quite some time now, you know that this thing happens every year. So there is a shift in time. There is a shift in time due to nature. That's how God has made it for us. So once it happens that way, the banks, the institutions, and other companies, they also adjust their time accordingly. And that is how come the forex market, somewhere ending of September every year, around the end of September every year to early October, we get this daylight saving time. That makes the time to shift a bit ahead. So now the market is going to open every Sunday at 10 p.m. my time. If you're in Ghana here, it used to open at 9, but now it is going to open at 10 p.m. There is 1 hour shift ahead. So take note, when it is exactly the time the market used to open in your country and the market is not opening, please, you should know that it is the daylight saving time that has shifted the time a bit ahead. So there is 1 hour shift ahead. Is that okay? So take note. I'm sure most of you might have received an email from your brokers telling you about change in time of when the market will open and when the market will now close. So take note of that. That is what they literally wanted to tell us. Is that okay? So today being Sunday, the market will open in Ghana here at 10 p.m. 10 p.m. In Ghana here, that will be 10 p.m. Now the UK time and the Ghana time is now 1 due to this daylight saving time. In the past, the UK used to lead us 1 hour. In Ghana here, when it is 9, it will be 10 in UK. When it is 7, it will be 8 in the UK. When it is 2, it will be 3 in the UK. But now, due to daylight saving, the time has become 1. So we, those who were behind, has been shifted ahead to meet those that were ahead of us. Is that okay? So we are all at the same level now in terms of UK Ghana, in terms of time. But along the line, somewhere next year, the time will change again. And then they will lead us 1 hour again. But for now, we are all the same in terms of time. If you are looking at the UK time and the Ghana time, we are now 1 due to the daylight saving time shift. Is that okay? Now, that is that. That information is important, so you need to take note of. To know when the market will open is very important. Is that okay? Now, let's go straight into last week's trades and see what happened and see whether our signals went into profit or not. Now, last week, we gave 3 signals. We gave USD CAD, sell. We gave USD CHF, buy. And then CAD CHF to buy. These were the 3 trades that we gave. Let's look at them and see what happened before we look at what we have for ourselves in this week. Now, this is the chart, and here we are. Let's look at what the market did. Let's bring USD, any of them. Which one first? USD card is here. All right. So USD card. This is, let me change the time to daily time frame or weekly. If I put it on weekly, as you can see, let me zoom in. This is weekly. And like I said, if you remember, I said USD card was going to give us a sell. And this is the weekly candle. We got a sell on it. Is that okay? But to get our analysis proper, let's go to the daily time frame. So we are going to count 5 candles. Is that okay? If we count 5 candles back, this is Friday candle, this is Thursday, this is Wednesday, this is Tuesday, this is Monday. So the market began from here on this candle. That is where the market began. So if you look at this, the market opened at a certain price. Let's look at the price on which the market opened on Monday or Sunday night in Ghana here. The market opened, come on, give me the time. All right, let me use this if it is trying to delay. The market opened on Sunday nights at 1.35560. And then it went up about 30 pips against us, and then started coming back our way into the sell. And then it came all the way and gave us up to a total of 134 pips. 134 pips. If you remember, our TP was 100 pips and our stop loss was also 100 pips. So this trade gave us the profit that we were looking for. A TP of 100 pips. We got it perfectly. Our stop loss was not hit, so we got this as a win. We got this as a win. Is that okay? That is it on this one. We got this one as a win. Our next trade was USD-CHF. USD-CHF is also here. We gave it a buy. USD-CHF, we predicted a buy. Now, USD-CHF, this is still on daily time frame. If we count 1, 2, 3, 4, 5, this is where the market began. Okay? We gave it a buy trade, right? So the market began here, came against us on Monday, and then on Tuesday, and then on Wednesday it continued against us, and then up to somewhere Friday, it still came back down against us about, as we speak, about 88 pips against us. It only went into profit about 25 pips, and then came against us about almost 90 pips. Now, remember, this trade, the stop loss is 100 pips, and the take profit is also 100. So this trade hasn't hit our stop loss, but we are in a loss at this moment on this one. Our stop loss hasn't hit yet because our stop loss is 100 pips. So we are still in this trade. That is how I will assume it, because our stop loss is not hit. So I will assume that we are all still in this trade without the stop loss hit yet. All right? So with this, let's move on and look at the last trade. The last trade is also CAD CHF. CAD CHF is here. This is CAD CHF. So 1, 2, 3, 4, 5. So the market opened here on this kind of candle. And then when the market opened, it opened around 0.6257. And then it went all the way up about almost 70 pips profit, because we said CAD Chef should be a buy. If you remember, we gave CAD Chef a buy. So CAD Chef went into profit about 70 pips, almost 70 pips. That is 69 pips, almost 70 pips. And then came back again from the profit, and then it entered into a loss. And currently we are in a loss of about 42 pips. Also in a loss of about 42 pips. If you remember, this trade too, we gave it a take profit of 100 pips and a stop loss of 100 pips. So it means that this trade too, we are still not closed out of it. We are still in this trade because we are in a loss of 40 something pips. So far as it hasn't hit our stop loss, we are still in this trade. Now, why would I still say that we are still in this trade? Now, let me explain quickly. When it comes to trading the forex market, you need to put yourself into a point that you will discipline yourself. You set parameters for yourself. You set rules for yourself and then wait patiently to see what the market will do, whether those rules will be broken or they will be respected. Now, we have set rules for ourselves that any trade that we take, we are giving it a stop loss of 100 and a TP of 100. So far as our stop loss is not hit, it means we are still in that trade. If it hits our stop loss, that is fair. Forex trading, there are losses. It is not always win. No one can ever say that he has traded 100% wins without a single loss. There are losses. So you need to respect whatever rules you set for yourself. That is what will help you to be able to review your strategy to know whether you are doing well or the rules that you have set for yourself are good or not. So don't be in haste to start changing rules when you are actually trading a strategy. So the 3 trades that we gave, 1 gave us our take profit, 2 are in a loss against us, but they haven't hit our stop loss yet. 1 is against us almost 90 pips. The other one is against us almost 40 something pips, 42, 41 pips. So we are still going to hold those 2 trades and see what happens or what comes out of it. Is that okay? These are 3 trades. If we win 1 and lose 2. 3 trades, if we win 1 and lose 2, if each of them, like I told you, if you are supposed to use 0.01, it means each trade will give you $10 each. So the 3 trades, if you won 1, which is $10, and you lost 2, it means you are going to be in loss of 10 pips in total, because 200 pips loss against 100 pips win will be a deficit of 100 pips. You get it? The same way, $20 loss against $10 win will give you a deficit or a loss of $10 if you do the deduction. So we need to stick to the rules and see the way forward. That is how we trade. We don't trade by changing rules every minute, every second. Is that okay? So we are still in those 2 trades. The card CHF trade and then the USD chef trade. We are still in it, right? Good. Now, I would like to add a few more trades, maybe 1 or 2, and then we can then monitor for this week. The trades I am going to give you is going to be on Euro JPY. That is the first trade for this week. Now, Euro JPY has done something very nice. Let me zoom in. If you look at this, or if I go on the weekly time frame, this is weekly. Okay? Now, on the weekly, we are seeing something. On the weekly, the trend got broken. If you look, the trend for the weekly got broken, and we had almost a retest of the trend. If you look, the trend got broken, and then this trade, the rule of trend trading is that whenever a trend is broken, there is a possibility that that trend will be tested. The trade may go back and test that trend that was broken before the new trend will begin or will start. And so if you look here, you see that the trend got broken, the uptrend got broken, and currently it looks like we are in a downtrend. So under normal circumstance, the market needs to go back and respect that trend, come back and test the trend, and then come its way down. And we saw something of that sort here. But this thing is still very confusing. The trend hasn't been totally or fully touched. The broken trend hasn't been fully tested. If I go to the daily time frame, you might see it better. Now, those who believe in break and retest strategy, which is part of technical analysis, there are a lot of strategies, but we have a strategy that we call break and retest. And the break and retest means that when the trend is broken, the trade must go back and retest that trend before the new trend will begin. So on daily, if you look at it here, you see that yes, on daily, actually the trend was broken. The uptrend has been broken over here. It got broken here, if you look. This is where the trend got broken, right? And then the trade came back up and retested that trend again over here, if you look. On the daily, it retested that trend that was broken. Is that not it? So on the daily, the break and retest has happened. And then this trade went back up again into that same zone, if you look. It went back into that same zone, and we have seen a very big sell rejection on Friday. A very big sell candle. This is a sell candle, which is an engulfing candle that has engulfed about 1, 2, 3, 4 days candle has been engulfed by a single candle. This is how powerful break and retest can be. There are people who use break and retest as their own strategies. Break and retest strategy. So some people, they just stick to the break and retest strategy. When the structure is broken or when the trend is broken, they expect trade to come back and test the trend or test the area that got broken and start going the new direction. So the trade came here, tested the uptrend that got broken, and then came back down sell. Now the trade has gone back into that broken area, and we have seen a very strong momentum to the downside, which shows that that trend that got broken is still very valid, as you can see here. But we need to look at something if we go on the 1 hour time frame. Now, let me take you to the 1 hour time frame. This is on the 1 hour time frame. If you come here on the 1 hour time frame, you will see it clear. You see that everything I demarcated on the weekly is still the same. This is it. If I zoom out here on the weekly, it's still the same thing. So this is what I came back on daily, and it gave you this, and now I'm on the 1 hour. If I go on the 1 hour and I zoom in, you still see the same picture, right? So that is how you can actually analyze from the bigger time frame and then come down to the smaller time frames, and it should still be giving you the same thing. So you see that on the weekly, daily, and 1 hour, it is giving us the same picture. That is how, when you are doing top-down analysis, it should be. So those who also trade the top-down analysis. Now, when it comes to strategy, there are lots of them. So there are those who trade top-down analysis. There are those who trade the break and retest analysis or strategy. So if you are doing the top-down analysis, this is how you can do top-down analysis. If you are also doing break and retest, this is also a way to do the break and retest strategy. Now, if this break and retest strategy is the way to go, then we need to look at it on the smaller time frame this way. There is also another trend that has been broken. If you look at it here, this was also another uptrend. Is that not it? On the 1 hour, look at it. This is also an uptrend that got broken. Is that not it? And we had the same thing over here. If you look here, we had the same uptrend here, and it got broken. Now the uptrend here, the small uptrend here on the 1 hour that got broken, if you look, the trade came back and tested it. Did you see that? Let me take the trade out of there, this thing out of there, so that I will show you what I'm trying to demonstrate. If you look, let me zoom this one out. We are learning as I'm giving you signals, so we are learning as well. So that is why you must be here every Sunday. Yes, you must be here every Sunday, so that whatever analysis we will do, you will learn and also understand how the market works. Now let me put this thing here. This is where the market broke this uptrend. When it broke the uptrend, the market came down and went back and tested where the broken area. And it kept on testing that broken area. If you look, it kept on testing the broken area. Until finally, it dropped and came down to this level. Is that not it? So whenever the trend is broken, those who trade break and retest, the trade must go back and test that trend that is broken. And that area must not be broken. If the trade should move out of this area and go up, then it means that this trend that was broken is a false break. But so far as the market remains in that zone that is broken, and it is not able to break and go up to the upside, it means that this trend, which was an uptrend, which was broken, is still valid. So you can see it. It kept on testing that zone, testing the broken zone, testing the broken zone until it finally came down. Now we are seeing a similar thing here. If the same thing is to happen, another trend to the upside is broken. And if that is the case, we expect a retest of that area. Are you with me? We expect a retest of that area that is broken. Yes, we expect it. So we expect trade to go back up and test this zone and then fall back down. So if I zoom out like this is what I mean. This is the area that got broken. So if this trend is indeed going to hold, then this market must come back up and retest this area before it will finally fall back down to the sell area. So if that is the way to go, looking at where the price is at the moment, from here back to the top, it's about 240 or 250 pips. Back to the area that got broken, it's about 250 pips. So if that is the way to go, we want to look at a trade opportunity by taking a buy. And why are we taking that buy? We have seen that after the break, if you look, after the break, the strong momentum that broke the trend, after the break, the market slowed down a bit. It slowed down. The market slowed down a bit. So it means that the momentum to the downside is fading so that the market can go back up and retest the top before breaking to the downside. So that is why we are seeing this low momentum. If I change it to maybe 15 minutes, this is 15-minute time frame. So on the 15-minute time frame, this is 15 minutes. You can still see the same thing, that the momentum to the downside has kind of slowed a bit. As you can see, it has slowed down a bit. And if that is the way to go, if I pull this off, you see that on the 15 minutes, the momentum to the downside has slowed down a bit after this momentum broke through the trend. So if that is the case, we expect the market, if for nothing at all, it should come back up to this level. Okay? Let me clear this one. And then if for nothing at all, on the 15 minutes, it should come back to this level. This area here. And between where the market is, where the price is to that top here, is more than 100 pips. You see it? It's about 120 pips. Even between here to here. This is 15 minutes. Between here to here, it's about 120 pips. Now, our target is just 100 pips. We are targeting only. This is 1 hour time frame. So whatever I have put out here, if I switch to any time frame, you see it clearly. If I switch to 5 minutes, this is 5 minutes. This is 5 minutes. So whatever time frame I'll switch to, you see it very clear. You see it? So we expect the trade, if for nothing at all, even if it won't come back to the top here, it should come back and test this lower zone here. And between where the price is to that place is about 120 pips. So our trade for Euro JPY is going to be a buy. A buy. All right? So this is our reason that we want to take a buy. Does this make sense? So we are looking at what? A buy. Let's quickly write down our things and go. We are looking at what? A buy. A buy trade on this one. So all of us are looking for a buy. Using the break and retest strategy, we are looking for a buy. It must go back and retest the broken area before, if it will come back down, it comes. So we are looking for a buy. What is our entry? Let's look at our entry quickly. So our entry price, the market is closed. So it's 158.730. This is our entry. As you can see, this is our entry here. 158.730. So what is going to be our take profit? What's going to be our take profit? So our TP is going to be, since it is a buy, we will add. So our TP is going to be 168. Right? Oh, sorry, did I say 168? No. It's going to be 169. Come on, 159 rather. 158 point. So it will be 159.730. 159. That is a TP of 100 pips. This is going to be our take profit. Then what is going to be our stop loss? What's going to be our stop loss? Which is our SL. Our SL is going to be 157.730. That is going to be our stop loss. So our stop loss is going to be 157.730. So this is a trade that we are looking at this week. Is that okay? We are looking at a buy on Euro JPY. Euro JPY. If you want me to put the trade there, let me write it so that maybe that will become the last thing I should write before we go. So we are looking at Euro JPY. That is the trade. Euro JPY. Are we good? So this is going to be our trade. Euro JPY, our entry price, which means the market is closed. So when the market opens, then we take this trade. 158.730. Our TP is 159.730. Our stop loss is 157.730. And it's a buy trade. We are going for a buy. Is that okay? Are we good? Good. If we are all okay with this, the other instruction I must add to this is that I have told you that whenever you are taking a trade, you should wait for maybe an hour or more before you enter your trade. Because whenever the market opens, the spread is very wide. The brokers, almost every broker will open up its spread. After some 1 hour or so, then they begin to close the spread. So it is very important that you wait for the brokers to close their spread before you enter. Let them give you a minimum of 3 pips, 5 pips, 2 pips as spread before you enter your trade. The reason is that if a broker should open up a spread of maybe 50 pips or 100 pips and then you enter that trade, what it means is that you have already incurred a debt of 100 pips. So it means that before your trade will go into profit, that trade must move beyond 100 pips before you start seeing profit. So the trade must move 101. If the spread is 100, it means the trade must move 101. Once it gets to 101, then you start being in profit. So it means if your take profit is going to also be 100, it means that trade needs to move 200 pips before you can get 100 out of it. So that is why it is good that you wait for the brokers to close their spread before you enter your trade. So if your broker gives you 5 pips or 3 pips or 2 pips, when you enter 100 pips, you know that you are only owing 5 pips or 3 pips or 2 pips. So if it's 5 pips spread, immediately the trade goes into the C pip, then it means you start being in profit. And that is easy. So do not, that's what I want to mean. Do not enter a trade when the spread is so wide. You will be in so much loss because that is the commission the broker is taking from you. So if you allow their commission to be so big, then it means you are going to get something small. Is that okay? And this commission is taken up front. Immediately you enter the trade, you see the loss. The loss you are seeing on the trade immediately is the spread that they have charged. So if the spread was 3 pips, the 3 pips you are seeing is the loss. The 3 pips you are seeing is the loss. So that is why anytime you enter a trade immediately, you will see a loss on the trade. The loss is as a result of the spread that the broker has added to your trade. So make sure you wait for the broker to close their spread before you enter a trade. Now, if you don't have a broker and you want to sign up with a broker, I have a lot of brokers that I'll recommend to you. If you go to the description of almost all my videos, including this one that you are watching, when you go to the description, you will see the broker recommendation. You see broker 1, broker 2, broker 3, up to broker 7. If you are in Africa, I will suggest that you sign up with broker 1, broker 2. If you are in Africa, broker 1, broker 2 is good for you. If you are in other parts of the world, including Europe, if you are in Europe, then broker 4 up to broker 6 is also there for you. Broker 4 up to broker 6 is also there for you to sign up with any of them. If you are in the US, at the moment, you may have to contact me before I can give you a broker recommendation if you are in the US. So if you are in the US, you cannot sign up with any of the brokers that I have given, because those brokers are not in the US. They are not. So those of you in the US, you can't sign up with that broker. But if you are not in the US and you are in any other part of the world, these brokers that I have listed, when you go through them one by one, you will see one that is available in your country for you to sign up with. Is that okay? Thank you very much. I will see you in the course of the week. There is a challenge that is coming. I don't know if you have heard about it. The video before this one, watch it. It's about the challenge we are about to take. It might interest you to be part of that challenge. So just watch the video before this one. Or I'll put it at the top here. The top here. I'll put it there for you to see it. Watch that video and listen to the challenge we want. It's a 30 days challenge we want to do. From $50 to a profit of $450 in 30 days. So if you are interested, the link, like I said, watch that video up here and it will give you details about the challenge. Join it and let's see how we can take this journey and then move ahead in life in terms of Forex trading. Thank you very much. I remain Kofi, your admin for Leading Forex YouTube channel. I'll see you at the end of the week for another review.